Hello and welcome to Leaders of Tomorrow, India's largest platform for entrepreneurs. We bring you expert advice on how to make and manage money right. Also, strategies related to finance, strategies related to hiring, innovation, anything and everything that matters most to entrepreneurs is being covered right here on the show. We're continuing our big exclusives on the launch week of season 9 of the Leaders of Tomorrow by welcoming in a very special guest for an exclusive conversation, K Subramanian, the Chief Economic Advisor of the Government of India. Thank you so much for your time here on the show, sir. And it's good having you talking face to face with our entrepreneurs about what you feel is really the signs of recovery perhaps that we're seeing in the economy, and also what doing work in this new normal is looking like as far as you're concerned. My first question is the overarching theme that we have here on the Leaders of Tomorrow, which is empowering a billion dreams. If through this interview you were to speak to entrepreneurs and give them one message, what would it be?
The series of reforms that we have launched are especially intended to enable the small and medium enterprises to grow bigger. If you take the change in the MSME definitions, which itself draws from the fact that a lot of the incentive policies that we had in the government earlier were creating dwarfs out of our companies, small MSMEs, which, in other words, they aged but did not grow. And the change in the MSME definition is one big move in that regard. The labor law reforms, something that has been spoken about for 30 years. The 1991 loan given by the International Monetary Fund had labor reforms as a conditionality, and now we've implemented it. Increased the thresholds, reduced compliance significantly. For instance, about 44 laws have been codified now into 4. Number of sections has come down drastically. Number of minimum wages, for instance, that entrepreneurs have to comply with, which were about 2,200 odd earlier, now are 40. The threshold for standing orders has been increased from 100 to 300. Full-time equivalent, actually, entrepreneurs can hire. So a lot of the constraints that were binding on these small and medium enterprises, we have really worked on removing those constraints. Even if you look at the short-term measures, the emergency credit scheme was focused on MSMEs. That has been topped up as well. So, apart from the fact that our focus has been on trying to ensure that MSMEs get out, with least amount of scars, just skirmishes, the changes that we've brought in the medium to long run presents enormous opportunities to make the billion dreams come true.
In an earlier interview you said you were confident that we would see some sort of a recovery here in the country end of this year, early next year. Given that we are at the end of 2020, are you seeing some sort of a recovery? What sort of recovery are we seeing, if yes?
I think, Sunanda, we are already witnessing the recovery. If you look at the IIP numbers, we've done an analysis of the IIP, the core sector, and unpack the IIP numbers. If you look across sectors, primary, secondary, construction, infrastructure, there is a V-shaped recovery, all around, with the manufacturing sector exhibiting a much sharper recovery than the services sector. For instance, the manufacturing sector PMI now is at a 10-year high. It is also reflecting the opportunities that we have opened up in the manufacturing sector through these various reforms. The service sector, despite the fact that a couple of them, continue to be affected by social distancing, which I presume will continue till the pandemic is over. Despite that, the service sector PMI has clocked about 53 now. So in an expansionary phase, which means the other service sectors are actually expanding, much more. So overall, the recovery that, something that I had spoken about after the Q1 GDP numbers have indeed manifested. But they are two-paced, with the manufacturing sector recovery being a sharp V, the service sectors being actually less, the pace being a little lower in the service sector.
So if I was to get industry specific and talk about the industries that, like you were mentioning, that are already seeing some sort of recovery. Manufacturing, for instance, has seen some bit of an uptick already. Services sectors, sectors and industries like tourism, for instance, where you need a bit of social distancing, those are taking a little more time, in your view, to really see some sort of a pickup. So for entrepreneurs who are in these services sectors, my question is, what would you want them to keep in mind about how they should, ride out the next couple of months, what they should do when it comes to the recovery, what they should put in place in their businesses?
I think for these sectors, firstly, the recent stimulus measures, have focused the credit scheme, for this emergency credit scheme, on the 26 stressed sectors identified by the Kamath committee. The necessary relief has been provided, and we are continually monitoring this aspect. The key message that I would want to give to our entrepreneurs, especially in some of these stress sectors, is that scale is a very important aspect of resilience. The COVID crisis has underlined the importance of resilience, be it in the context of supply chains or in the context of individual firms itself. And therefore, I would strongly recommend that our small and medium entrepreneurs pursue scale, because in the process, the first thing they do is to benefit themselves. When they have a firm which has 100 crore turnover versus a firm that has 1,000 crore turnover, obviously the profits that they're making are, likely to be 10 times larger. They are also providing employment to a much larger population, thereby doing national service and doing well for themselves as well. So scale is what I would really advocate to all our small and medium enterprises. Now that we've launched a bunch of reforms to enable scale, economies of scale to be reaped, that is what I would recommend, because not only does it build resilience, but it also brings significant cost advantages, because your fixed costs actually get amortized over a much larger scale, and thereby, you become far more competitive. The related message is also that our entrepreneurs, use the Indian market, the deep market that we have, to cater not only to the top 20-25% of the income pyramid, but also create products and services for the entire income pyramid. I think the FMCG sector, more broadly retail and microfinance, are excellent examples of this, which I think the other sectors and MSMEs in other sectors can definitely learn from, because crafting the products to the domestic market can also enable them to thereby go and conquer the export sectors.
I want to talk about the macro economy and talk about macroeconomic data. The headlines as far as the GDP is concerned, definitely not encouraging a contraction of 23.9%. A lot of concerns being raised by analysts. What would your takeaway really be on those numbers, and what would you like to say to anyone who's watching this interview about your own concerns on the GDP perhaps?
Sunanda had actually written about this in an article in the Indian Express. The analyst estimates in the month of March were based on assessments at that point in time. But India had a severe lockdown, as the Oxford University's index clearly pointed out. And in the Indian Express article, I had actually shown a chart where I related the GDP decline to the intensity of the lockdown, fully explained the GDP decline in the Indian context. And I've also, mentioned there that the lockdown was required given the size of the Indian population, and therefore our strategy, in responding to COVID was based on the humane principle that while GDP growth will come back, and it indeed has come back and is coming back, human lives that are lost cannot be brought back. And that is the principle that drove our strategy. And therefore the lockdown was more intense, and which is what explained the 23.9% decline. And I think during the unlock phase, the recovery of the economy actually also buttresses this point, that it was actually because of the restrictions created by the lockdown that the GDP decline in Q1 was sharp.
You've spoken about credit penetration and your concerns, if I can call it that, around credit penetration. That's just not really great. We've been speaking with a lot of fintech companies which say that during this period of this pandemic, over the past 7, 8, 9 months, their lending has gone up almost 80 to 90%. So my question to you is, where really is that gap as you see it? Because on the one hand, you're saying credit penetration is not great. On the other, companies that are lending even to small businesses are saying that their lending has really been great. Where is the mismatch?
Two things here, Sunanda. Firstly, I think we have to start talking about India's scale. We are a population of 137 crore people. I think 100% growth rates is something that we should certainly, that's something to commend for sure, but we have to keep the base into account, when we have to cover such a large population. For instance, I would say, take the 40 crore accounts that we have on Jan Dhan, right? These accounts have now been in existence for close to 6 years, about 5 to 6 years. And, there are transfers, direct benefit transfers that are happening. People are withdrawing as well. So there is enough transaction data where, an AI engine, an ML engine can go and really, build credit scoring models. So why isn't, a fintech getting into trying to actually, give loans to those people at, these 40 crore accounts? Why aren't we targeting other financial services like insurance, agricultural insurance? These are really, bottom of the pyramid, but that is where, as CK Prahalad actually mentioned, there is fortune at the bottom of the pyramid, and microfinance has indeed illustrated that, demonstrated that. So the fintech, needs to really get into utilizing this opportunity. Similarly, take the postal network that we have and the postal bank that we have. Now, we have, the postal bank, India Post Bank has a core banking solution as well. The postal payments bank has data on transactions. The core banking data can be combined with transactions data to actually, again, build credit scoring models. And, there is no better penetration than the postal network. So why can't actually, a loan be given on a features phone where the postman goes and basically provides his or her own assessment of the borrower as well, together to really penetrate credit, credit to vendors, credit to our, people, in the hinterland. That's where the opportunity is. There is enormous opportunity, for especially in the financial sector, and fintech must look to latch on to it by really looking at the opportunities for data and analytics, AI, machine learning, all of them, put together.
Sure, so we're going to take a very quick break on that note, but we will continue this exclusive conversation with the Chief Economic Advisor on the other side. Do stay tuned. Welcome back with us here on Leaders of Tomorrow Season 9, and tonight we're continuing our conversation with the Chief Economic Advisor. One more money related question, and that's as far as how entrepreneurs should be looking at saving their money, right? Should be investing their money differently perhaps. In 2021, entrepreneurs speaking with us saying not much has changed as we speak in terms of money really coming in to businesses here, and they don't perhaps foresee too much of a change when it comes to the money inflow really into businesses. If you want businesses to keep something in mind about how to perhaps raise money differently, how they should be looking at the change scenario, should they be looking at a change scenario, will they be looking at a change scenario, what would you have to say?
I would say that there is opportunity for our entrepreneurs to really seek formalization. And this is where I'm appealing to especially the smaller companies. For instance, if you are formalized and you have a lot of verified data through, tax returns, through transactions that are done digitally, those can be really used to access credit. And there is a lot of research in, finance which shows that access to credit is a big growth impediment for small and medium firms. And therefore, rather than be myopic and just focusing on, on let's say the here and now, what our small and medium enterprises should do is to be visionary and thereby, look at the enormous opportunities that they get from formalization. And in this is one instance where formalization for them actually is something that is really good for them in the long run. They can become much more profitable and thereby, do good for themselves and also do good for the country, because that is the other aspect that the COVID phenomenon has illustrated, that a formalized economy actually is much more likely to be more resilient at the macroeconomic level. And therefore, we really have to push more and more formalization, which is what we are doing. In fact, I hope that the MSMEs would actually see the opportunity and be visionary in going for much greater formalization and scale and scale in the process as well.
We were talking about fintech companies earlier. I do want to talk about the banking space. One bank being placed under a fresh lending moratorium by the RBI not too long ago. Without going into any specifics, I do want to understand from you your view as far as bank lending is concerned. Do you think perhaps that the challenges of the past few years behind us now, and that entrepreneurs can perhaps expect easier lending by banks going forward?
Yes and no. I think with demand picking up, certainly, I would think that the opportunities to do lending would be significant. The no part is actually based on 2 points that I want to illustrate. Firstly, the seeds of crisis are always sown, during good times. When things are ramping up, that's when oftentimes diligence and prudence may be sacrificed in sort of a breakneck speed firms pursue or lenders pursue. So that is something that our banks have to watch out for. And here's where, again, technology is something that I strongly recommend. Research has clearly illustrated if you have very good data platforms, analytic platforms, you can grow the balance sheet without having to incur the problem of recurrent non-performing assets. The second point, on the no that I said is that banks have to watch out for zombie lending, and evergreening of loans. Forbearance during this period is something that is required. That is what is, both practical and is recommended, theoretically as well. But this is the time when actually, banks can end up evergreening loans or, continuing to give loans to those firms that do not have much of an opportunity to really grow. Something that, it's called zombie lending. So our banks have to really watch out for fintech companies as well to ensure that credit does not go to zombies, because at the macroeconomic level, any capital that goes to zombies actually really sort of distorts capital allocation, because it does not go to those who actually can grow much better. And therefore, and banks and the financial system plays a very important role in capital allocation. So, zombie lending is something that, our banks will have to watch out for, sure.
Speaking of lending, I do want to talk about the CGT MSE scheme. A lot of entrepreneurs have been telling us that it's not any easier to raise funds collateral free or otherwise. How do you see that perhaps changing?
I would like to list out the facts. If you look at the aggregate data of the 280,000 crores odd of, the target that was kept, about 2 lakh crores has already been done. And this is, in fact, leads me to make a broader point, which is that we should not rely on anecdotes. We should rely on aggregate data to actually infer, because sometimes, anecdotes may be just those. The aggregate data seems to clearly suggest that this is one of the best parts of the stimulus scheme, which has been taken well, and that is why, it has been topped up as well. Second, this is the scheme, the way it has been structured. There is a one-year moratorium, and there is a credit guarantee as well that's been given to the bank. The moratorium ensures that the repayments on the loan start only after the economy actually has fully recovered. So this is something that is a very well designed and a good scheme, which a lot of MSMEs have benefited from. Those that actually would like to benefit should also, I think, look at this scheme more carefully.
I want to talk about the NPA figures for small businesses. The headlines indicating a 12.8% is where the NPAs stand as of the mid of this year for small businesses, compared with about 11.4% on a Y-on-Y basis. Do you think this is primarily only because of what has happened during the pandemic, and that we could perhaps expect that things will definitely start picking up going forward?
No, that's not unexpected, right? Given the COVID and the demand, significant demand shock that, a lot of MSMEs, especially in the services sector, might have taken up. Though one caveat, it's possible services sector does not borrow as much from banks, but even manufacturing sector also, some of them took a demand hit. And June was the period when the unlock was still basically waiting to happen. So I would wait for the recent data on this, because this is a period where banks have to make sure that there is no evergreening, no zombie lending, because if that happens, then the NPAs will eventually come back to bite them.
I know we're a bit of a distance away from the budget, but since we have you on the show, I do want to get your thoughts on what small businesses can perhaps look forward to when it comes to the next budget, or what perhaps they should keep in mind.
One of the aspects that I would like to think carefully about in this context is the national infrastructure pipeline. It's a $1.3 trillion set of projects that have been identified. No other country has such an ambitious infrastructure agenda laid out, and infrastructure has enormous potential because the positive spillover effects that it creates in other sectors is just enormous. So, fiscal spending on infrastructure is something that is really, a win-win, which we must focus on. Past evidence, if you look at the period from 2000 to 2002, when after the Asian financial crisis and the economic sanctions that were imposed after the nuclear test that we did, the growth had declined significantly. In fact, for 3 years, the growth was 3.8, 4.8, and 3.8%. What was done at that time was huge infrastructure spending. The golden quadrilateral was built at that time, and reforms were done. Now, reforms actually, much more reforms have been done this time. What we need to therefore follow up with is the fiscal spending, especially on infrastructure, to ensure that, the spillovers to all the other sectors in the private sector thereby happen.
All right, sir. Thank you so much for your time here on the Leaders of Tomorrow.
My pleasure. Thank you.
We've run completely out of time on this very special interview. Our contact details, though, coming up as we speak. Do let us know what you thought of tonight's interview. Thank you very much for watching. Have a good night.